Welcome back. The US Fed opted for a pause in rate hikes in its latest FOMC meet. Ahead of this pause, the US Fed had hiked interest rates rapidly to tame soaring inflation. The interest rate hike saw a huge flight of capital and investments towards debt and gold. But now that further rate hikes seem unlikely, should you go heavy on gold? Let's welcome on board Kunal Shah, Head Research Nirmal Bang Securities, and answer these questions. Kunal, good evening and welcome to the show. So, a pause for now, but then how are you reading this when it comes to gold and its trajectory for rest of the months left for this year?
Okay, so about the first part of your question, pause. Okay, so this is the pause in the interest rate cycle, not the reversal of interest rate cycle. So we are going to see this pause for some more time, maybe perhaps 3, 4, 5 months, at least conservatively, because the reduction of balance sheet is taking place. Fed is repairing its balance sheet, and right now it is hovering around $8.4 trillion. It is likely to come down below $8 trillion. So this is the quantitative tightening is going to continue in months to come. So this is not halting. So we are seeing a pause in the interest rate hike, but the quantitative tightening will continue. But in spite of all of this news, gold prices are not going down. So we are seeing redemption in gold ETF, slag jewelry demand in India, slag jewelry demand in China. So ETFs are not buying, jewelry demand is low, but then too, gold prices are not going down. The reason for that is the central banks, some of the other central banks are turning up and buying gold. Historically, we have seen central banks were not holding gold, but right now the options for them are very limited to diversify their foreign exchange reserve. And last year, if you see the average of 10 to 15 years, the average buying by central bank was 400 tons. Last year, central bank bought 2022 was 1150 tons. And this year, again, I'm expecting so far it is roughly around 250 tons, but that number to increase and test 750 to 800 tons. So it's a central-led buying gold, led buying in gold, which is taking place because central banks, in order to hedge themselves, in order to hedge their reserves, they have no choice. There is no other currency which is as good as dollar where they can diversify. So they are by force diversifying their reserves into gold, and that is going to lead to another spike in gold prices. And that's the reason why gold prices are not going to go down and still going to continue to move up.
What is the upside left when we talk about prices on COMEX and in Indian terms?
Yeah, so we've already seen so far 5.5-6% upside in gold futures on CME. And going forward, I'm expecting conservatively another 5 to 6% upside by the end of the year. The point which you discussed, the possibility of rate cut, right now it doesn't exist. Maybe if the economy worsens, so far economy hasn't gone bad. But if the economic data from US continue to disappoint, then that expectation will start to build in. So that will add fuel to the fire because already central banks are buying. And if that kind of expectations start building up, then gold can conservatively test $2,090 to $2,100 by the end of the year. Next year, it is going to continue. Next year, another 10% return. So I am not expecting this bull run to abate. And this is going to continue, and gold prices are just going to move up exponentially, even from present levels also. The downside seems to be very limited.
In what scenario you think the downside can go more aggressive?
In a scenario where central banks are forced, central bank gets some other alternative where they can diversify their foreign exchange reserve. They get any other alternative currency which is equivalent to dollar. So such kind of scenario makes a compelling case for central bank to sell gold and to buy this kind of currency. So that is not going to happen, at least in a near future. Second, a cool off in the geopolitical tension between Russia and Ukraine. So maybe our Indian Prime Minister has gone to US. They are going to initiate peace talks between Ukraine and Russia. That's one of the agendas. Something like that happens, that can lead to a fall in gold futures. And the third most important point, Fed will again turn very hawkish and start raising the interest rate, which for the time being doesn't look the scenario. So the first two scenarios are the only scenarios where gold prices can, go down instead of moving up.
So it's often said that one needs to diversify in gold as an asset class as well. But then you think for people who have entered this asset class for maybe a short term or a medium term outlook, it's time for them to book profits, or maybe they can extend the time horizon till the end of this year, where you just mentioned, the prices can go up to 2090 and a little more upside from there, 10% if you talk about next year. Time to just hold on to it?
Absolutely, there is no point in thinking about even profit taking in gold because central banks are buying. I would say when central banks are buying the gold, earlier they used to buy gold was not strategic. This time they are buying gold for more strategic purpose. So whatever is going on in the world, from the geopolitical scenario point of view, from the interest rate, monetary, still feel that, like I said, it is a strategic investment, will continue to be in next 3-4 years. So I would recommend to go long in sovereign gold bond, which is going to fetch you 2.5% interest also. So it's a great scheme to invest in. You are getting interest for holding gold, and you are also contributing in India's growth story in this. So one should invest in sovereign gold bond.
We all thank you so much, Kunal, being on the show, helping our viewers with their investment in gold. We'll slip into a short break.